Hello, Maverick traders. I cannot believe it, but it is December 22nd, a few days before Christmas and a week before the new year begins. We have just a few days left of trading. So 5 days left. The markets are closed Monday. So we've got 4 days next week and tomorrow. So let's go over what we see here. Today was a down day. It was a down day, and if we take a look at what happened here, we saw the Dow was down 1%, S&P down 1.5%, NASDAQ 2%. Now, these were off much worse at about the middle of the day. We did get a little bit of a bounce, about a 0.75% to 1% bounce back up, but they were still just a down day. You can see down across the board. Let's talk about why. Now, first off, why is the market had already broken through support, was already in a downward trending move. But some of the reasons why we saw the move today was that we got third quarter GDP raised. Now, again, this is in the rearview mirror quite a bit. This is showing the Fed that the economy is stronger than they thought, and this will only make them be more aggressive. Remember, right now, good news is bad news, and bad news is good news. Good economic news means the Fed will be more restrictive, which is bad news for the markets. Then we also heard from Micron. They came out with earnings, but really what they said going forward, there's a huge glut of semiconductors. Don't you remember just hearing a couple months ago how there was a shortage? Now there is a glut of semiconductors, and they're pulling back, they're cutting spending, they're laying people off. The whole semiconductor industry was absolutely crushed today, and that really affected the NASDAQ. If we take a look at our charts here, we can see that we've had this big sell-off. So this is a huge sell-off, 410 all the way down to 380. That's about an 8% run down. Anytime you see an 8% run, you would expect to see some bit of consolidation, and we're getting it right in an area of support. And if you take a look back in a chart, there's much more support back in May and June. But here we are. We're finding the support. We had one little bounce, came down, pierced it today, came back up. I would not be surprised if tomorrow's candle is somewhere between the high and low of this range here. Would not surprise me at all. But the fact that we haven't really bounced is telling me the next move is likely going to be lower. If we jump over to the NASDAQ, you can see that it is even worse. The NASDAQ just never really bounced much, and once we broke this level of support, we came down, had a little bounce, and you can see that today's candle looks nasty, and we are getting down into this range here of yearly lows. We're getting down here to where we're about to break down below yearly lows. The markets look bad. We come over here to the heat map, and it looks bad, and again, I want you to take a look over here at semiconductors. Got absolutely crushed. Big cap tech got absolutely crushed. And we actually saw a lot of weakness in the energy sector as well. So let's go ahead and update everything in our market outlook. Our market outlook at the first of the week was a -1, but we said if we get any more move downs, we're going to go to -2. That happened. So our monthly outlook is a -2 in the market, so moderately bearish, meaning we think in a month from now, we're going to have lower market prices than where we are now. We had a -1 on the week, and for the week, the market isn't down all that much. We did have that big bounce day on Wednesday, so we really are just down about 1% for the week. We'll see what happens tomorrow. Let's take a look at some trades here to finish up the week. One of my favorite ones on the long side is MRK. Just a great looking high base here. So we had a huge, massive run, and it simply just got tired, but nobody wanted to sell this thing off. Look at this thing. No one wants to sell it off. It's just resting, and now we're coming back up to the top of the range. So this one is going to have dollar strikes. I like the 112 strike. I'm looking to buy something like the 107 or 107.50. Sell the 112 diagonal call spread all day long. It's one of my favorite patterns to do diagonal call spreads, because if it hangs out in this range, guess what? You make money. If it weakens a little bit, guess what? You make money. If it takes off and runs, you make money. The only thing you don't want is it really plunges. Down here to the 105 area would be bad on the trade. Everything other than that, it's good. It's positive. Remember, we're not looking to play things super bullish here. All of our bulls are going to be a +1 at the most. We're not really looking for anything going higher substantially. Let's move over to a sideways play. Now, I actually really like the energy sector for a sideways play. I've been playing energy sideways for almost the last 2 to 3 months. And here is Schlumberger, or as we like to call it at Maverick, Schlumberger. If you don't know that story, you're going to have to check back when we talk about it. But as you can see here, we've stopped moving higher, but we're not really going lower. This 50 point, I really like this 50. We've got the 20 is crossed below the 50, telling us that there is no clear trend. There's just really no clear trend right now. I'm liking something like the 45, 50, 55. I think that is a nice one for next Friday. So again, we've got 6 days, well, actually 7 days of actual theta decay, but only 5 days of actual markets being open. So I like this trade here on Schlumberger. Moving on to some shorts. This is a trade I pulled out of our midweek trader room that Joe holds. Joe always asks our traders, what are your favorite trades? And this was one of them. Short eBay, nice breakdown today. Everything looks really nice. Looks like we're headed back into this 38 to 40 area. Probably has a little bit more downside, but I would not look past 38 for any sort of target on that one. Another short I really like is Roblox. In this downward market, I love to find the stuff that didn't bounce. So Roblox has been going down for this whole entire year. And then the market bounces. Remember, the market bounced. We didn't get any of that. And we're just stair-stepping lower. As you can see here, we've got a nice little 5-day base. Looked like it ticked down below it, recovered. I think it's just a matter of time before it breaks. I like the 25-27 bear call spread going out to the first week of January on this one. So let's go ahead and wrap this up. We are seeing more weakness, and I think the biggest reason we're seeing weakness here, we typically get the Santa Claus rally. The Santa Claus rally is at the end of the year. The pro traders have gone home, the big funds have closed up, and then we just have a bunch of people out there buying, and it tends to make the market go higher. That is not happening this year. And I think what's happening is there's just a lack of buyers. Just think to yourself, everyone knows or thinks that 2023 is going to be terrible. Why would you buy the last couple days of the year? You won't. No one's looking to do that. I think the reason we're seeing weakness is that there's just a lack of buyers out there. With this lack of buyers, if there is a lot of people that still want to sell by the end of the year, I actually think that we could see a pretty good down move over the next 5 days until the new year. If we do get a lot of selling and there's not a lot of buying, we could easily come apart 3, 4, 5% in a week and then probably have a nice little short-term bounce early next year. But we do see these markets likely just trending down until the new year. We do get one bit of economic news, and really the last of the year, the core PCE price index. This is the Fed's favorite inflation measure. And again, same thing. Good news is bad news is good news. So we'll be watching that. And really, earnings are pretty much done until January about 15th, when the fourth quarter earnings reports start. That is the Market Roundup. Thanks for joining me. Goodbye, everybody. Have a very, very wonderful Christmas and holiday season or whatever you celebrate. And let's be safe out there. Goodbye, everybody.